talk about some investments today. We've got two guests with us. We've got Roham Jackson and Malik, who's a GP in Cardiff. He's dabbled in and out of investments himself. And Roham started his career as a professional asset manager. Roham, I'm going to pass on to you. So tell us about investment.
I think you guys, I mean, not being the doctor in this group, is you guys are probably in one of the best positions when it comes to post-career retirement at the moment, because as far as I understand, medical profession doctors in particular are one of those few groups who still benefit from fairly decent state pensions. My father was a doctor, retired about 15 years ago. He's passed away now, but there's very few professions now who have anything like a final salary pension. Right. So from a pensions perspective, I'm going to take advice from you, but from other non-pension stuff, we can talk about, we can talk about the markets and certain products and what's happening at the moment. It's quite a wild time out there.
I think the main issue, for example, for me, that comes is in life, you start thinking about your retirement and you're thinking, well, you can't actually keep on working at the level that you're working when you're young. A point comes when your energy starts to dry out. And I suppose my question would be, a lot of people, like in Pakistan, for example, people would invest in properties. Mm-hmm. And I think that's the case probably in most of the places. But there are businesses and stocks and shares, and a lot of us don't understand those things. I don't know if it's because of the education we receive in the university. We tend to more gear towards biology and medical sciences than mathematics and economics.
Well, that makes sense, but at the same time, I think there's a lot of there's a misconception that doing degrees and subjects in things like economics and finance would help, but let's say there's a big gap between the theory that gets taught and the practical reality of actually making money. I think there's a really big gap. And I'm speaking from someone who did an economics degree. So I'm telling you that that is not where I learned about how the markets behave. That's not where I learned about how to invest in stocks and shares and other assets and risk management, all that kind of stuff. It's not through those financial institutions.
Mohsin, tell us about yourself.
My name's Mohsin. I'm a GP from Cardiff. I enjoy my job. Alhamdulillah, I'm quite lucky to have quite a good, rewarding job helping people. But yeah, similar to what you said, Sajad, I always think about the next step. Either get older, retirement plans, backup plans. I'm self-employed. I'm not like a salary GP or a partner. So if I was to get ill, I wouldn't have any backup option really. So that's where the idea really for me of passive income comes in. And I've spoken to you about this before, Sajad. My main passion, I guess, is community work, Muslim community work, and I feel there's a lot of projects that we can start that would benefit the Muslim community, but it needs money. And I always think if we had a certain amount of money, then we could do free, say, Arabic classes. We could have Islamic institutes here, and so many different things. So it's always in the back of my mind, not just becoming financially free myself, but also being wealthy enough to start these different projects. So that's where I guess I'm always, looking into different ways of making money. What are the best investment options, short term, long term?
Mashallah, yeah. I can relate to that a lot, actually.
Yeah, so thinking about more like projects that you want to fund through passive income.
Yeah.
Right, okay.
Or maybe just having free time, right?
Exactly. I mean, I'll be honest, there's enough doctors in the world, mashallah, Muslim doctors, and I genuinely feel I could benefit the community much more being something else other than a doctor. So if I didn't have to worry about money, could have a nice passive income, and I could, like one of the things I spoke to Sajad about this before, I really feel the madrasa system is needs updating. It can't just be that kids go there 10 hours a week for 5-6 years and only come out learning how to read the Quran and nothing more. They need someone to help the teachers come in, teach them Islamic sciences, teach them Arabic, something, so they leave the madrasa system with something more than just being able to read the Quran. And this is, I've looked at different programs up and down the country, and there are good syllabuses out there, just needs people to carry it out. And I want to be able to be in a position to do that and help my local mosque or other mosques to do that, but I can't at the moment. But inshallah, I hope to in the next few years. Plan is to eventually become semi-retired and then fully retired in the next 10, 15 years, and then focus on these different things.
Inshallah, yeah.
And so have you made any sort of, I don't know, it's a bit of a personal question, but have you looked into any investments?
Yeah, loads. So I, as you know, me and you both talked about cryptocurrency when the bubble happened a couple of years ago. Another bubble might be happening soon, who knows? But yeah, generally it's real estate. So I've got a few friends who do property development. I think Roham knows a brother called Mark King. I'm from Al Manar.
Yeah.
So through him, you can get properties below market value, do them up, and then just gradually with what's it called, compound investment. So any money you make, you just keep investing it in and so on. So I haven't done any via that brother in question, but we hope to. But yeah, I've done a few property investments generally, and I found a few other options across the country. So there's two main ones I found which have good returns. There's one, the Trafford Centre in Manchester, and another one called Intra Crowd in London, where they're both different things. So Intra Crowd, you buy just land beforehand, before the planning, and then they get that planning approved and then they sell it on to developers, and you can make between 50 and 80% profit between 12 and 18 months. And then the other one is, it's a stranger one, but it's a very clever concept. So the Trafford in Manchester, what they do is they buy, what's the term, off property or something like that. So it's not even been built yet, it's not even land, they've just got these plans in place, but they need a deposit to go to the bank. So, and once they have got the deposit and they've built the buildings, then they sell it on to foreign investors from abroad, and you make a 50% profit within 12 to 18 months. So they're the ones I've started at so far. But I don't, to be completely honest with you, I'm quite early in my own kind of investment journey, because I didn't really think about money until the last couple of years, until I got married and had started thinking about where the community can improve and all these other things. Up until then, I'm terrible with money. I spend whatever I get. I don't save. I don't have a concept of budget flow, nothing like that. It's only recently that I've been reading a bit more, and I've been looking at the importances of doing things like that. So it's only recently that I've started thinking more about this way of thinking.
I think what concerns me now, especially with the COVID-19, is that there's a lot of talk about the economy going down and the markets being affected and people are losing jobs. And if your economy is not doing very well, the investments, property prices and things like that are all going to take a tumble. So how is that going to affect when an average person is losing their job? I mean, we're probably lucky ones because we're still working. And as medics, you're still seeing ill patients and you're still getting paid for that work. But how a second investment or any passive income is going to make money, that's questionable or debatable. Roham, can you sort of shed a bit of a light of what sort of investments are out there?
Yeah, sure. I think I just picked up on one that Mohsin mentioned, which was that Intro Crowd, and I've done quite a lot of due diligence on those guys. So I'm familiar with their business model. What I would say, and not to sort of pick on them too much, is it's always important to get into the T's and C's in quite a lot of detail and really understand really understand the offering, which might be a bit, again, I appreciate it might be a bit intimidating if it's not something that you're particularly familiar with, but when I did look into those guys a bit more, it wasn't, should we say, it wasn't as appealing as it sounded on the surface. And that really came down to where the burden of risk lay. So we don't want to go into them too much, but essentially that's one thing that was a bit of a flag.
Yeah.
But generally, just let's go a bit broader when we talk about investment. So yeah, of course, there's many different ways, and most of us are probably most familiar with property and investing in property, and that's been good. It's been good for our parents' generation. It's been good for our generation, and one of the simple reasons is sort of economics 101, right? We have growing populations, and it's a fixed asset. As Mark Twain said, buy land because it's the one thing they're not making anymore. Except maybe in Dubai. But yeah, so you can see why what we call hard assets or fixed assets, in an environment where governments are inflating the currency, so they're basically printing lots and lots of more money, all that money out in the system looks for a place to go, and it looks for, one of the things it looks for is scarcity, and land is a scarce asset. So you have this situation where generally over time, over the last few decades, if you look back, the money supply in most economies is growing because of the nature of how money is created, and it looks for things which are in relatively limited supply compared to itself, which is in growing supply. It's that simple supply and demand mechanism. Everyone can think of the analogy like diamonds. Why are diamonds so expensive, right? It's not just because they're pretty. There's lots of things that are pretty and shiny. It's because they're very, very scarce. So the same kind of principle applies to property. Same thing applies to Bitcoin. Same thing applies to gold to some extent. Now, does that mean that those assets are always a good investment? Well, that kind of depends, because how long are you buying it for, and what part of the market cycle are you buying it for? And this is one thing that I think a lot of people don't understand from the economics money side of things, is that markets move in these cycles. Like imagine, remember doing like sine wave stuff, when you're doing maths at school or uni, the markets move in these cycles, and within the cycles you have smaller cycles. So you have sine waves within sine waves. There are times when buying property is a particularly good investment, and there's times when you're buying a market that's hot. In the same way, let's use something a bit more topical and fun. Your Bitcoin, there's a time when it's a good idea to buy Bitcoin, there's a time when it's not such a good idea to buy Bitcoin. Buying Bitcoin in 2016 was a fantastic investment, even if you held it until today. Buying Bitcoin at the end of 2017, you're still 50% loss on paper. So in 10 years from now, let's say hypothetically Bitcoin's 30,000. Well, both of those people were winners. The guy who bought in 2016, he's a bigger winner, right? Because he got it cheaper, he got more of them. But even the guy in 2017, he's now made money. So you can't take the time element out of it. And all markets have their own cycles. Now, being able to understand what the cycle is for any particular market and where you are in it is one of the big challenges. And it's particularly challenging these days to, we talked about passive income, we talked about retirement. We probably live in one of the hardest times, I think, to be able to make sound, sensible financial decisions that we can sort of quote unquote guarantee for our retirement, because there's so much flux in the system. But at the same time, we have more opportunity than ever before. So it's this interesting kind of double-edged sword, right? We don't have, even doctors, right? Probably the most secure, as you guys were saying, probably the most secure jobs you could have in the current economy, right? There's not a shortage of people, and there's certainly not a shortage of sick people. And there's definitely a shortage of doctors. But again, supply and demand, right? You guys are in a great position, but you don't have those final income salaries. Your jobs probably aren't as secure as they were 20, 30 years ago when my dad was a doctor, where he didn't even need to think about the future. It was just like, yeah, I'm going to be a doctor 50 years, I'm going to retire, I'm going to have this pension and happy days kind of thing. And put doctors and certain professions aside, you have all these other people who are not in that profession who have nothing like that kind of guarantee these days. And on top of that, you have currencies which are being devalued by governments because the economic system is all a little bit house of cards. So, you know, how do we take all that and try and make sensible decisions? It's definitely challenging. And sometimes having lots of options just adds to confusion, right? You know, should I buy gold? Should I buy Bitcoin? Should I buy shares? You know,
and I think that's what sort of brings me to the main question that we were sort of looking for is, when is a good time to invest? If you've got a little bit of a money pot lying around and you are sort of really keen on investing in that now, how should one go about it? Is it wise to wait? Is it a good time to invest now? I mean, because time is a very relative sort of an object. You sort of look at it, and how do you manage that?
Yeah, it's a really good and important question, and it's probably worth me caveating. I'm not a financial advisor, which is actually a specific
also,
profession.
we're not advising anything financial on this.
No, we're not, right? Yeah, massive caveat, right?
It's just a discussion.
It's just a discussion, right? But I'm also stating that because, you know, financial advisors go through a lot of training in terms of how to balance, you know, individual portfolios based on your risk appetite. But obviously, given that I work in that sector, I understand the principles behind it. And one of those principles is obviously looking at your specific situation and say, right, okay, how old are you? What's your income? What are your aspirations? Right? So you might say, okay, well, I'm 45. I have a good job. It pays this much. If I wanted to, I could save this much. My risk appetite is moderate to fairly high because I can bank on my pension, right? Which is almost guaranteed, should we say? So I have this, you know, I have this element which I can be a little bit more speculative with in my investment. Now, it might not. It might not suit your or any other person's given temperament. They might say, no, I'm saving for a house. You know, topical. So I'm saving for a house or an extension, and and you know, I really need to get that done in the next 2 years. Okay. Well, the common theme in all of these is, and this is going to sound really like sucking egg simple, but it's basically you need to be in a position where you can save more than you earn. Sorry, save more than save some of what you earn, essentially, right? If you make 5,000 a month, you know, can you save 1,000 a month? Can you save 2,000 a month? If you make 1,500 a month, can you save 300 or 400 a month, right? Because you're not in a position to basically make investments and to grow your capital if you don't have basically
money to
equity and money to invest, right? So that sounds like such an obvious thing, and it is obvious, but the problem is a lot of people don't think like that. They don't think, actually, my ability to invest and to grow my net worth starts with changing my lifestyle. Now, if you're a single mother with 2 kids on a low-paying job, it's probably going to be extremely difficult for you to save anything. You know, if you're on welfare, it's going to be extremely difficult. But you would be surprised at how many people are on, you know, quote unquote, a really good income and save hardly anything. Because what they do is that as their income goes up, their lifestyle just goes up with it. Right? This guy's making 10 grand a month, but he's spending 9.5 grand. Of that 9.5 grand, maybe 5,000 is just on, you know, let's say not important stuff. And that's fine. If you want to live that lifestyle, no one's telling you it's wrong. But if you also want to be the guy who can, you know, build a portfolio of 50 or 100 grand for investments, well, you're not going to be able to do that unless you can either find income from somewhere else, right? Maybe a second job, or if you change your lifestyle such that you can save money to build that pot up. Does that make sense?
Yeah, absolutely.
Right. Roham, and once you've done that, what do you do with it? That's the second question.
Roham, have you ever read the book Millionaire Next Door?
No. Yes, I think I have actually. Yeah, that's a really good one. It's all like small business owners who are basically.
No, it's not actually, bro. I don't know. Maybe I'm misremembering, but I read about a year ago. Dr. Alamgir recommended it. Honestly, it's talking about exactly the things you're talking about. And it just talks about not just business owners, but just generally wealthy people, could be lawyers, could be doctors, and compares the ones who are financially free to the ones who aren't financially free. And it's written by a non-Muslim, but I just found there's so many like Islamic values in there, living in a humble way, in a minimalistic way, living below your means, being frugal with your money. And that way you have this, you have your over, I can't remember the phrase for it, your over savers, I can't remember the actual phrase they use.
Yeah.
And the more money, exactly what you're saying basically, the more money you save, the more you can invest, and then stronger your passive income is, and the stronger your financial position is later on. And when all these other people are, who maybe had a stronger income and they're still working to the 50s and 60s, just about making ends meet, these other people are just living a very comfortable life. And it can be, they did case studies of all these different people, whether it was wealthy people or not wealthy people, and it showed that even non-wealthy people, exactly how you said, if they can find a way of saving just a few £100s, but invest it wisely and do that regularly, then they can be in a very, very strong position in the future.
It's really a philosophy, actually. I think it starts with the philosophy, not with the economics, right? If you associate wealth, right, whatever wealth means to you, it's a very subjective term. But if you associate wealth with having more and more stuff, or being able to do things right in the moment you want to do them, again, I'm not making a value judgment for that or against it, but if that's how you do it, then you will always treat money coming in as something that you can get out the door as quick as possible. And that is not conducive to what we're talking about in terms of being able to build up equity and invest and take a long-term position. The thing that dawned on me many years ago was the real value of money is options. I don't mean options as in the financial instrument you can buy and sell options. I mean optionality, right? When you have money, when you have equity, and you especially if you don't have debt, or at least not debt that's out of your control, you have the options to do things. Money gives you options, right? And I think it's a very, very powerful thing, especially for young people. When you have money, it gives you options, right? And those options can be very powerful, because it could be options from a safety net perspective. For example, if I've been saving up for the last 2 years and I've got a few grand in the bank, if I lose my job, I'm not going to lose my house because I can afford to pay the mortgage for 6 months, right? Or it might mean I want a career change and it's going to take me a year to, train up for this new job I want to do, or I want to start my own company. Therefore, I need a year or two financial buffer. So now you have the option, right? The guy who's gone and spent all his free cash, maybe not so much, right? Unless he then goes into debt. I'm not looking at you, Dr. Saj. I'm not looking at you, bro. I'm just saying. I'm genuinely not putting a value judgment. It's a very powerful mind shift, and it has to start from that, I think, because we can talk about what's the best way to invest in these stocks or those stocks. Should I buy these stocks and those stocks? Should I buy cryptocurrency? Shouldn't I? Should I buy property? Yeah, fine. That's all the execution side of it. And we'll talk about that. But, I think it has to start with that understanding of what money means, and then how changing the way we think about money allows those other conversations to be had.
No, I genuinely recommend, because exactly all the things you're talking about, I'll be honest, I'm the most guilty. My family, my mum always tells me, even my wife's noticed that I'm not a very good saver or manager of money. If anyone's listening, I really would recommend that book.
Yes, it is a good book. It is definitely the one I've read. It's really good.
What is it called?
The Millionaire Next Door. Because the idea is that you won't know there's a millionaire next door because he didn't live a lavish life. He hasn't got a fancy car. He didn't wear fancy clothes. Hasn't got like Rolex watches. But because of his mindset and the way he approaches money and thinks of money, he's actually wealthier than most other people. So if anyone's listening, I really, really recommend that book. That did change my mind. It was strong. It was good enough that it changed my mindset on how to approach money. Exactly how Roham is talking about. So perhaps just reading a book might do it, but I think generally, you just need to think differently about life and how to approach these kind of things.
So maybe you want to go into the specifics a bit more. I wasn't sure if we got off a bit of a tangent, Saj.
No, that's fine. I think it was just a sort of a light chat today, really. We don't want to go on too much on details anyways. We're just having a little bit of discussion just to make people think a little bit and have a bit of a discussion. Maybe we'll come back to the topic again sometime in the future.
Yeah. It's a big topic, by the way. Yeah, if we start talking about stocks and shares, and there's, you know, we can talk about it a bit now, but you know, you can have a whole session just on those very easily and barely scratch the surface, right?
I think we'll do that at some point. We'll see how the interest is. And if people are interested, of course, we're going to have a little bit of a more.
I'll be interested just in my own, so I'll be.
Especially on bitcoins and shares.
Not about the market. Let's talk about Bitcoin, but Brian, maybe we can answer it now a bit. I did look into, I guess, markets and stocks and things, but I found it so difficult without outsourcing to someone with a lot of expertise, because most professionals, what they want to do is they just want to put their money somewhere and not have to worry about it in a way. Like, that's an easy thing with property. If you know someone who's investing in property, you just give them the money, they sort it out. But with stocks, two issues. Number one, you have to do a lot of research into the papers and the reports and things like that. And number two, the other way I noticed people were looking at stocks, were they're looking at the graphs, like these market cycles, like you said, these Elliott waves, Fibonacci's, and all these different type of things. And either it's a really, really, really amazing science and an art, and you can become really, really skilled if you train yourself up, or it's just a load of rubbish, and I can't really tell. So maybe you've got a bit more experience and you can tell us. Maybe
sure. Well, so just to so a bit of context, my company Zeroventa is owned by me and my business partner, who's a brother with a background in finance as well. Mashallah, he's a good friend, very, very good friend of mine. And so through this company, we do various things, and some of the work we do is, we call it financial business management consultancy for startups and SMEs, right? So these are guys who are building out their financial models and business plans for the next few years. And, you know, we have a lot of experience in growing companies from small to medium to large, all this kind of stuff. But one of the things I specifically spend my time on is actually trading and investing our in-house fund. So Zeroventa has its own fund. It's like a of course, it's a friends and family fund, but essentially it's a closed fund at the moment. And so I'm actually a very active trader. So I trade the markets daily. So you talk about those charts and things, that's literally like in the background at the moment, more or less, of my screen.
It sounds like such an amazing thing to do, but how long did it take for you to get to that level where you could do that?
It's tantalizingly simple and extremely difficult at the same time. So I've always been interested in the markets. Like I said, my background academically was in economics, right? But that just sort of tapped into my fascination with how economic systems work and things. And for many years, I was pretty intimidated when it got down to the individual level, you know, of companies and charts and things. I just kind of stayed away from it. But then over time, I just became self-taught over a number of years. What I would do, just to help you kind of structure it, and tell me if it doesn't help, right, is there's basically two ways. There's two core ways of approaching investments in companies, right? And we're talking about, public companies here, right? So let's make the distinction between public and private companies. Public company is a company that's listed on a stock exchange, right? You, me, anyone else in the world, if they have an account with a broker, they can set up, put money in there, and they can say, right, click buy, I want to buy some Apple shares, I want to sell some Apple shares, or any other company that's a public company, right? A private company is, you know, like my company is, you know, even your companies, for example, you guys probably do your GP practice through a company. Those are closed private companies, right? People can't buy and sell shares in your companies until you either invite them or until you become a public company. So when we're talking about private companies, it's a slightly different approach to making an investment in them, because you guys will probably know the stories of like Facebook, right? Facebook now it's a very, very big public tech company, but in the early days it was a private company, and the way they raised money was to basically go to the market, go to like venture capitalists and people with money and say, look, we want to grow, we have this great idea, we're trying to raise X millions of dollars, give us X millions of dollars and we'll give you 10% of our company, right? And it's a private sort of transaction. So we're not talking about those ones for them. Again, that's a whole interesting discussion. It's a lot of what we do at Zeroventa as well, but it's a different thing. Public companies, when we're trading, there's two main approaches. There's basically fundamental analysis and there's technical analysis. The fundamental analysis, and you alluded to it as you were speaking, Mohsin, was looking at their balance sheets, looking at their income, what are the products they're making, what markets are they in, what are their price to earnings ratios, all these different sort of layered ways of trying to find out, is this company going to be more valuable in the future than it is today? And once you've done that assessment, and there's no hard and fast rule of checklist what you have to do, but once you've done that assessment of the company by looking into the market and looking into the people who are in the company and all these different metrics, you make a decision. Right, yes, I think company ABC is going to be worth more. It could be 5 minutes from now, or it could be 5 years from now, right? It depends on the time frame you're interested in trading, right? Because of that, I'm going to buy this company today. So you make an investment. How much you invest, how do you manage that risk, all that stuff is, again, a sub discussion that's very important, but just for the purpose of this. The other one, so that was fundamental analysis. Technical analysis, which is my sort of bread and butter, actually, is the stuff on the charts, right? And this is where you're looking at basically price charts of assets. It could be gold, it could be Facebook, it could be Bitcoin, it could be anything you want, right? You just change the name in the top left of the screen. It doesn't matter. You're looking at a chart, you're looking at time, you're looking at price, and you're seeing these data points over whatever period you're looking at, and you're basically saying, right, there are patterns that present themselves here, right? And these patterns that present themselves, they're not entirely random. And because they're not entirely random, because of the very fact that I can discern patterns in the historical price behavior, I can then develop a framework to anticipate those patterns repeating themselves. And because I feel like I've noticed there's a pattern, that if I can say buy that asset when that pattern next emerges, I believe there's there's a probability in my favor that pattern is going to repeat itself and the outcome is going to repeat itself. And so you can then make an investment decision, what we call trading essentially. You can make an investment decision to purchase that asset and to sell it when some other pattern occurs. And you can build, what you do is you build a framework of trading around that concept. So I'm just talking about, we're not talking about whether it's Fibonacci, we're not talking about whether it's Elliott wave or any other. There's so many different methodologies of actually executing that. But the principle, if it makes sense, and stop me if it doesn't, is the principle of repeating patterns. Because, and this is why I find this endlessly fascinating. I'll nerd you guys out on this if you let me, if you don't stop me. But essentially, when you look at price of an asset over time, what are you actually looking at? You are looking at the entire history of every single person who is engaged and made a decision to buy or sell that asset throughout its history. So think of it in the way that you might, I like the analogy of standing on the tallest building in Piccadilly Circus in London, and you look down and you see all the crowds interacting with each other, right? And they move in these they flow between each other. And you notice as you stand there, that there's certain patterns at certain times of the day. There's more volume of people coming through this bit, and they move like this, they move like that. No one's actually standing there with giving instructions to anyone. They're just collectively behaving. And that's essentially what a market is. It's this collective behavior of people making decisions. And if you can learn to get in sync with that, you can start to recognize some very interesting patterns.
That's quite interesting. And I think from the looks of it, I think it's also not very simple that we're going to cover in one podcast, I believe.
Yeah, it's a bit of a, like I said, it's a bit of a...
Yeah, so I think it's something we should actually come back to at some point. Thank you very much for today, guys. I think we're going to call it a wrap.
Great.
Not the one you read. because I've been too much. Thank you very much, Mohsin, for coming.
Thanks, guys.
Inshallah, hopefully we'll
speak to you soon, inshallah.